online residential real estate marketplace, Zillow, just released financial figures for the third quarter of 2021. Along with announcing the end of their home flipping service, which Zillow provides, they also reported reasonably strong performance on the top line. What's good, you guys? This is Market Thrive, and today, we're going to talk about the tech real estate marketplace company, Zillow, what transpired with its offers, and the situation the business is in at the moment. Before I start the video, I would just like you to do me a favor by just hitting that subscribe button and the bell notification down below to keep you updated on this channel. So without further ado, let's hop into it. When it comes to buying, remodeling, and selling homes on behalf of the corporation, Zillow offers a service that they launched in 2018. Zillow CEO Rich Barton stated on the conference call that the website focused too heavily on the challenging task of projecting home prices. The value of a large portion of Zillow's inventory of homes decreased by the time they were able to sell them due to the recent cooling off of U.S. residential real estate prices. As a result, they suffered a loss on Zillow offers of around $500 million just in the last quarter. Richard Barton and Lloyd Frink, both former Microsoft employees, founded Zillow at the beginning of the new millennium. In order to digitize the real estate markets, Barton developed the idea to use Zillow. Real estate professionals known as agents have typically conducted the majority of real estate transactions face-to-face and in person. Real estate agents are responsible for bringing together buyers and sellers for transaction in the housing market. Both the buyer and the seller typically employ separate agents to research the market and represent them during discussions. In general, if there is a circumstance where each transaction is done with a significant amount of in-person dealing and discussion, the idea of digitizing and putting things online is always a consideration. That's where Zillow fits into the real estate sector. Through its online marketplace, Zillow assists in connecting home buyers and sellers. Sellers can easily advertise their properties for sale on Zillow.com, and buyers can quickly search for properties that match their criteria, such as location and other aspects, and their criteria, such as price. Compared to the MLS-dominant previous system, this represented a significant change. The same fundamental issue of linking buyers and sellers is resolved by the MLS, a paid service that is largely utilized by full-time licensed real estate agents. No matter if they wanted to work with a real estate agent or not, anyone could use Zillow to examine listings, which was an extra benefit. This contributed greatly to the residential real estate market becoming more effective for more than 10 years. This marketplace is run by Zillow as its primary offering. On their platform, they made money by selling products and providing expert services to real estate brokers. However, there was a very evident cap on the entire addressable market for these products in the residential real estate industry. Maintaining a marketplace website that customers use just a few times a year at most can only hope to bring in so much money. So in 2018, they unveiled a brand new, radically unconventional business concept for a business of their size: professional house flipping on a large scale. The CEO of Zillow praised their new house slide business as a significant stride for the company during their 2018 annual press conference. Rich Barton particularly emphasized that, quote, dramatically increases their total addressable market, end quote. In order to get ready to purchase and renovate a significant number of homes, they expanded their borrowing capacity by $1 billion. Check out the history of the company's total and current liabilities in the graph below. You can see that their long-term liabilities, which are shown in blue, virtually increased to reach roughly $700 million in the third quarter of 2018. Their long-term obligations then grew further a year later, reaching $1.5 billion. By the end of 2019, their current liabilities, primarily short-term debt, had grown steadily every quarter to exceed $900 million. The major purpose of this was to help them pay for the houses they planned to flip, but sadly, this proved to be a losing venture. Historically, flipping houses has been a small-scale activity that anyone can engage in to generate profits of tens of thousands or occasionally even hundreds of thousands of dollars. For it to be successful, one needs to have a thorough understanding of plumbing, electrical, interior design, and occasionally even building. A downturn in the market can make flips unprofitable even if everything is done correctly. Thus, it is also important to pay close attention to the local market dynamics of the real estate markets where the flips are being done. Here's CEO Rich Barton on CNBC reflecting on what happened with Zillow's house flipping business. Quote, "This was a necessary decision. We just determined that being an iBuyer was too risky, too volatile, and ultimately addressed too few customers, too narrow." End quote. He added, quote, "We went into the business as a big swing on the bet that we could actually predict the price of a home 6 months into the future and do so with a very narrow margin of error and have our hold times be very short." End quote. The important thing to remember is that successful house flipping on a scale as vast as Zillow needs having extremely precise models to estimate a house's value and what the value of a house would be after some degree of restoration. A computer would have a difficult time evaluating it, which is the issue. The detailed knowledge regarding factors that affect a home's pricing, such as, for instance, if the floor plan makes sense, cannot be used efficiently by a machine learning system. Based on factors such as total square footage, the number of bedrooms, baths, comparable sales, etc., a house can appear to an algorithm to be undervalued. In that scenario though, getting rid of the house would have cost tens of thousands of dollars because it sits on a septic system. That could help to explain, for instance, why the house's value isn't what it appears to be on paper. When making a decision based on these variables, a human buyer would speak with the seller's representative and consider each situation individually. However, an algorithm used to analyze tens of thousands of flips, as was done by Zillow, can result in people buying all these kinds of circumstances, believing they are getting a wonderful price when in fact they may not. Since the outset, there have been skeptics in the investing community about the concept of Zillow offers, always viewed as less desirable than Zillow's core business due to the poor profit margins and capital-intensive nature of the enterprise. Some people believed the plan would fail from the start because house flipping is essentially human and situational. Here's Steve Eisman, an investment manager famous for shorting the real estate market in 2008 and being portrayed in the book, quote, The Big Short, back in 2019. Quote, "I would say Zillow has one of the most flawed business models I've seen in a very long time. They had a good business, which was their internet real estate platform. The growth in that has slowed dramatically so that now the growth is zero in that business." Then he added, "They like to say that they're experimenting with new pricing, but really what they're doing is they're trying to change the pricing of their entire business. That's a problem. The part of the business I find the most problematic is what they call their iHome business, internet buying business, where they actually go out and buy homes and flip them." End quote. In an effort to retreat from its disastrous house flipping venture, Zillow is currently sitting on 7,000 homes that it is attempting to sell on residential marketplaces across the nation. In addition, it is letting go of a quarter of all of its staff. Zillow's core business is still healthy and in fact a very excellent business despite the fact that the stock has dropped significantly since the news came. The INT section is what they refer to. It takes a very little capital and has a very high profit margin of about 30%. It is the core of a tech company, although one of the area of Zillow may not be expanding quickly. It's not like the business is now headed to failure. In the event that the stock price declines sufficiently, investors may decide if it is worthwhile to consider the stock based on the merits of its non-housing flipping operations. Feel free to jot down your thoughts in the comments section below. If you enjoyed today's video, please leave a like. And if you want to stay updated on our posts, hit that subscribe button as well. Once again, this is Market Thrive signing off.